What's going on is Anton from AntonDaniels.com. I appreciate you guys for continuing to rock with me. One of the things that I'm always having conversations about is money. And in this instance, this is a direct reflection of what I'm telling people that they shouldn't do. During the pandemic, they're saying that options traders basically took a bloodbath during the pandemic. Now, we know that the market is down right now, and I think that personally, is going to be exponentially worse in this particular situation during this economy. So let me share this article that I was looking at from Bloomberg, in which they say that options traders lost over $1 billion collectively during the pandemic. So let me just go through the article, and then I'm gonna give you my insight as to why you need to start doing things a little bit differently as far as your investment strategy. We know that the market is down right now. We know that all of the different stocks from Apple all the way through Microsoft, Netflix, all of these different stocks are taking a bloodbath right now. But what I'm telling you guys is things are cyclical. But before we get to that, let me just get into the meat and potatoes of this argument. They said of all the risky things amateur investors did while locked at home in the pandemic, dabbling in stock options was one that veteran investors were convinced that would end badly. It would end badly. They weren't wrong. Turns out that taking leveraged flyers on meme stocks mentioned on Reddit's Wall Street Bets trading forum is harder than it looks. New research from economists at the London Business School found that mom and pop day traders managed to lose more than $1 billion during the bull market. Now, how do you lose money during the bull market? That's the thing that I'm trying to understand. How do you lose money during the bull market? It just seems impossible. Everybody that stuck around and did not sell during the pandemic in 2020 made money. The bill climbs to $5 billion when the cost of doing business with market makers are factored in. The study, Retail Trading and Options and the Rise of the Big Three Wholesalers, shines considerable light on the fate of individual investors who became obsessed with side bets on the stock market in the era of zero commission trading, spurred by Reddit posts, urged on by Twitter and TikTok influencers. Daily volume and bullish contracts set record after record as stuck-at-home tinkerers flocked to contracts in an effort to juice up returns. Now, let me give you some insight into what's going on here, right? What's really happening right now is that people are not making investments, although they like to cloak it in that word. They weren't making investments, they were gambling. Let me say that again. People were not making investments, they were gambling. Just because you dabble in the stock market and you try to juice things up, the reality is that most people that are options traders, and there are statistics that back this up, more than 90-something% of options traders lose money. Especially in a bull market, you telling me that people collectively lost, not made, lost over $1 billion. And then when you factor in other things such as fees, let me look at this again. Let me go up. The bill climbs to $5 billion, so an additional $4 billion when the cost of doing business with market makers are factored in. That means that every little TikToker and every person and every influencer, and just because they saying, hey, get into this new meme or get into this new thing, that does not mean that they have the insight and information to be able to lend you accurate advice. And that's why I say often at times, if it's good enough for them to advise you, it should be good enough for them to actually show you their portfolio or show them investing in it as they advocate for you to do it also. Real talk. And it's unfortunate because everybody is an investor now. I've seen several influencers run for the hills and divest themselves. I would say in 2020, we had over a 75, close to 78% return because we didn't sell, and instead we bought more because that was the thing that I learned during the recession. But let me go ahead and continue this and read a little bit more of this from Bloomberg, and then we gonna slice and dice this, okay? Researchers estimated that retail investors lost 1.14 billion trading options from November 2019 to June 2021. This is actually closer to a year and a half than it is 1 year. Assuming a 10-day holding period, trading costs ate up an additional $4.13 billion. That's not even the actual, buy and sell options using options, the hold time, the holding period, assuming a 10-day hold period, trading costs ate up an additional $4.13 billion. To measure the performance of non-professional traders, the authors tracked options orders coded as originating with retail brokerage and sent to high volume market makers known as wholesalers. When few factors were at play, the authors, among them, hapless market timing by the retail group, super wide bid-ask spreads in their options of choice ate up a large portion of the cohort's potential gains. It's unfortunate. Study is one of the first big unpackings of that sensational chapter in modern market history. A sign that era is receding came Tuesday when Robinhood Market said it is dismissing 9% of its full-time staff after the online brokerage's hyper growth has cooled, meaning that people are not sitting there in their house for an extended period of time trying to gamble. They were not investing, they were gambling. And so I'm going to tell you what I tell people on a regular basis that try to convince me that options are the way or they're learning options. Stay away from options. I'm going to say it again. Stay away from options. It's easy to make the argument and say, well, the market is down right now. Well, the market is cyclical. And you don't lose until you sell, B. And then C, you're supposed to be making informed decisions, not betting on the stock market. Making an informed decision is much different than betting on the stock market. Let me tell you the difference. Making an informed decision means something that you're willing to hold on to for the next 10 to 15 years unless something crazy happens that leads you to believe that the leadership of this company is leading the company in the wrong direction, such as a Peloton or a Zillow, right? But at the same time, when you're doing the research and you're looking for the 8 things, and I talk about this in the Patreon, the video was in the Patreon, when you talk about the 8 things that you look for when you're looking to invest in a company, including all of the intangibles, you start to make more informed decisions and you stop looking at it as a bet and you start looking at it as an investment. An informed investor is much different than a person that's betting on the stock market. The thing about it is that you have to look at it holistically. You have to look at it and say, if somebody came to me and they said, hey, invest in my restaurant, invest in my car wash, invest in my small business, invest in my web development company, invest in my startup, you would vet them. You would vet them effectively. You would say, when would I get a return on my money? How long do you think we should hold? What's the valuation? What's the exit strategy? How many employees? Where's the location? You would ask all of these questions. Who's going to manage it day to day? Are we going to solve for the employment crisis? You would ask these questions. You would vet effectively. But people don't do that when they're looking to get into the stock market. They're looking to bet whether it's going to go up and down and then time the market. Nobody can predict and time the market. There are market indicators that indicate when you should get in, right? Or when you should get in more, such as now, which is the time that I'm buying even more stock because, for example, Elon Musk bought Twitter. Tesla's stock went down 126 billion total. It's a buying opportunity for me, according to the research that I did on Tesla specifically, right? I'm looking to vet the company effectively versus bet on and time when it's going to go up and down. And it's a completely different investment strategy. What am I telling you? Stay away from options. Stay away from doing a thing that's going to absolutely have you in a bloodbath in your finances and going in a hole. And stop gambling on the stock market. Stop gambling with your money and start making informed decisions. Make sure you join the Patreon. Link is in the description as well as pinned to the top of the chat if you're watching this as a premiere. I love you. We are doing big things. We got the investment series going on. I just dropped a video a few days ago on how you can leverage your hustle in order to get rich. We got the Patreon meetup in May 14th. That is going to be popping. I love you guys. I appreciate you. I hope you guys continue to be successful, but stay away from options. That's not the move. I'm going to holler at you later. Peace.